Good afternoon, everyone, and welcome to Stock Market Today. It's Justin Nielsen here, and I'm joined by Ed Carson. It's Tuesday, September 27th, and we've got a market that's still going a little topsy-turvy. Ed, what do you have on tap for us in terms of stocks?
Yeah, I want to take a look at a few stocks which definitely moved with the market. Vertex Pharmaceuticals, World Wrestling Entertainment, and Shockwave Medical.
Okay, very good. But first, let's go ahead and take a look at the markets. Looks like the S&P 500 finished down about 0.2. It was down a lot more than that, so well off its lows. The Nasdaq Composite was able to make a gain of about 0.25%, and the Dow Jones Industrials down about 0.4%, and the Russell 2000 up about 0.4%. So a really mixed market. But Ed, we've been kind of holding above these June lows, except for the Dow Jones Industrial Average, which kind of knocked those lows out last week. But now the S&P 500 joined in that takeout of the June lows.
Yeah, the S&P came down. And it was not a pleasant morning. Once again, for a second straight day, we opened pretty strongly and then reversed lower. In fact, the Nasdaq was up 2.2% within like 15 minutes of the open. So, it was a broader gain.
Yeah.
Yesterday was like, it's mostly the Nasdaq, and the Dow was lagging pretty much all day. This one was a strong gain. We exceeded Monday's highs, so it came right up there, but very quickly came down with Treasury yields racing higher. The Nasdaq has still avoided undercutting even last Friday's lows, let alone the June lows. But S&P and the Dow have now undercut. They did bounce back, but with Treasury yields as high as they are, it's we're still well from the 10-day line. It's not very positive action out there.
Yeah, and I mean, it looks like the Nasdaq Composite here keeps on bumping its head against the 11,000 level. So we'll see if that's the new area that it has to get above, but certainly having trouble so far. And again, we might as well just take a look at the Dow Jones Industrial Average and see that, it did make that undercut last week of the June lows. And I mean, it was making some progress even further lower this week. And then we have the Russell 2000, which, that one's been kind of holding right at the lows there. And I don't believe that one breached it yet. The IWM is what Ed is showing here. That's the iShares Russell 2000 ETF until we get that Russell 2000 data. But you mentioned the treasuries, and I mean, it wouldn't really be market coverage without noting what's going on with the treasury. So we have 0TNX here on MarketSmith, which is the CBOE 10-year note. And I mean, this looks like a growth stock that's screaming through a climax almost.
It really does. We might be saying, take your profits if this were a stock. But yeah, it's just gone up so much. And you can look out on a weekly too. It's just such huge gains, from 2.5 to almost 4% over like 9 weeks, less than 9 weeks. And we're coming up on, we're at 12-year highs. We're almost, we're getting close to getting 13-year highs, just pretty relentless. And you can understand why the stock market has been unable to make any kind of real bounce in recent weeks, with Treasury yields doing this all month, and really last month too. Mm-hmm. It doesn't have to happen every day. I mean, if yields dip a little bit, the market can still fall, or yields can rise a little bit and the market can still rise. But generally, week to week and over time, when the Treasury yield is doing this, that is just really tough for the stocks.
Right. And so now we're getting about almost up to that 4% level on the 10-year Treasury. And with, with a lot of people looking at the Fed funds rate projected out to be 4.6 by their own measure, is this something that, we should expect some higher numbers here for the 10-year Treasury? And is this going to become the new normal?
I mean, it could certainly go higher. The 2-year yield, you would suspect, would be the one that, more closely matches the 10, the Fed funds rate, or something like it's closer linked. The shorter end is, that's around 4.3. It didn't really move that much, but I mean, when you're that high, I don't have to move every day. I mean, there was some stronger economic data that might have lifted the long end. It could be that the 10-year doesn't get much higher, but the only reason that would be the case is probably as if people think the Fed's going to push the economy into a real full-fledged recession, and that the shorter end keeps rising, and this doesn't. And that's not a great scenario either, because it's hard to see the market rallying heading into a recession. I mean, we can be in a recession and the market sees the light at the end of the tunnel, and it's like, okay, now we're going to rally, but it's hard to say, yeah, in 6 months we're going to be in a recession. There's not too many that usually the market does not rally into a recession. So that would not be a great scenario either. So not a lot of great alternatives. It's like either hot inflation or recession. What's your
Yeah.
poison?
Yeah, rock in a hard place. And as you mentioned, I mean, that 2-year Treasury, I mean, that's been above the 10-year Treasury for a while, yeah, leading to that inverted yield curve that often does presage a lot of recessions. Now, we might as well go ahead and take a look at the dollar, and we can pull up UUP, which is an ETF that tracks the dollar index. This has also been looking like a great growth stock as the dollar just continues to scream higher after I mean, it's been trending higher for a while, but it just seems like the trajectory has changed recently.
Yeah, and there's starting to be more of a currency crisis type concern out there. The British pound really has fallen over the last several days. Now today it did bounce, but it rose nicely at the open, but then
Mhm.
it paired gains quite a bit. So that might have been among the many factors. I mean, it's hard to know what's driving what. They're probably all driving each other. This is straining corporate profits in the U.S. because all those dollars that are either exports are hurt or overseas profits get translated into dollars, fewer dollars. Meanwhile, foreign currencies, this is driving up inflation elsewhere. Balance of payments, if you have dollar denominated debt in a foreign currency that's falling, that's painful. So there's a lot of strains going on, and that's adding to all that kind of concern that something will really break. Not saying it has broken, not saying it will, and it may not be in currencies if something does break, but there's just a lot of strains.
A lot of strains, absolutely. And speaking of which, what has that done to the fear index? We can take a look at zero VIX, the VIX, also known as the fear index, measuring volatility. That kind of had a little bit of a pop recently.
Yeah, and that could be one reason why the market came off lows, even though the Treasury yields really didn't. I mean, Treasury yields held on to most of their gains. This is coming up. It's at 3 month highs. You could argue there's some kind of trend line that we broke but broke a few days ago. Uh, you know, there's probably some reasons to think that this isn't necessarily high enough to indicate a bear market ultimate bottom. Maybe we're close to a level where we get a short-term bounce. Obviously, we're not getting it, probably in part because treasury yields keep rising.
Right. Yeah.
But there's that. But even that, it's like a short-term bounce doesn't mean it's the ultimate bounce. You could get a bounce for a little while. There's maybe arguments to say that a level here would be something more along around 45, 48 would be something more that you would expect it. But these are secondary indicators. These are, not saying that, if the market doesn't turn a dime because the fear gauge says something, well, that's the market is going to do what the market wants to do.
Yeah, absolutely. Let's go ahead and take a look at some stocks, and we can start with Vertex Pharmaceuticals. This has been one of the market darlings for a while, and while the pattern here doesn't look great with it kind of getting stuck below that 50-day moving average line, it's worth noting that this has a blue dot. The relative strength line has been making new highs while this base has been forming. What's your take on Vertex?
Yeah, I mean, exactly that. I mean, now at this point, a lot of leading stocks are stuck below their 50-day lines, even with their RS lines hitting new highs. That should just tell you how the market is doing. For a brief moment, and this was soon after the open when the market was near its highs, this was getting above the 50-day line. It was hitting a trend line. In a better market, you might have been thinking, hey, that's a buy signal. Well, the reason why we say it really wasn't a buy signal is because of things like this. And, it closed fine. It had a solid day, given that the market was mixed to down, but it backed off. A lot of things backed off. A lot of things backed off more than Vertex, and I think people should be wary of of buy signals even when they do crop up. But it'd be nice to get above the 50-day line, but in this market, this is still one of the strongest stocks.
Right. I mean, it's worth noting that this flat base is only a 10% depth. And when you have the markets off, at 20% off their highs, and this is only, 6 or 7% off its highs. I mean, it's a stark contrast when you usually expect stocks to be down much more than the indexes. So the fact that it's holding up certainly makes it watch list worthy. But as you mentioned, in this type of market, do you really want to stick your neck out?
Yeah, and it's just tough in that situation.
Yeah. So speaking of a SmackDown, let's go ahead and take a look at WWE, which is World Wrestling Entertainment. Something that looked like it was, having a strong day and getting above that 50-day moving average line, only to get smacked down by the close. Still up for the day, but not nearly as much as it was.
Yeah, the volume was never that great, and there was some higher the volume the prior days, though it found support. So it's hard to take a whole lot of negativity on those things. It bounced above the 50-day line. It got above this old buy point for what it's worth. You could argue the trend line again. It was much like Vertex in a stronger market. You would have seen that move and thought, well, I think maybe that's going to go. I think that's a place where I could step in. And the thing is, with the market pulling back, this briefly turned negative. It did close with an okay gain. With again, you got to be pretty happy with any stock that posts a gain right now.
Yeah, right.
So it's definitely one to watch. You can see how the RS line has skyrocketed when really the stock hasn't made much of a gain in the past few weeks. But that again, where the market is still below the 50-day line, maybe if the market improves, this can be one that can actually make a real move over that level. It's just tough because it might make that move, and then the market actually keeps on going. You might miss that early entry, but I think in this kind of market, you have to let things go. Knowing that there's a chance that it might keep going against the pretty high risk that the market will reverse lower and leading stocks will wipe out gains.
Yeah, absolutely. And I mean, we keep on seeing that happen over and over where something will start off strong and then, by the close, it's not looking nearly as enticing. And that's where you can get hurt a little bit, right? With all of these false starts and little losses kind of adding up into, hey, this is now starting to hurt the portfolio. Let's go ahead and take a look at as a final ticker, the SWAV, which is Shockwave in the medical field. This is another one that looks like it's trying to climb back up above that 50-day moving average line after what was a pretty terrible week in one of the leaders that was arguably holding up very well.
Yeah, and that's the thing. There's a lot of stocks that looked really good right until last Wednesday or so when the Fed meeting came in, and it's just hard to withstand that. And Shockwave went from 300 to below 250 in a little over, basically, 2 days, really. And that's just something you have to watch out for. It's coming back. The volume is a lot less, lighter volume bouncing, hitting resistance at the 50-day line. Definitely one to watch. This could easily, maybe this forms a new base, but this is one that if it got above its 50-day, you wouldn't say, oh, that's a buy signal in any kind of market. That was just too violent of a drop, I think, to think in that situation. Maybe this one sets up again. Obviously had a really nice run. The earnings are tremendous, so definitely one to be watching. But when the bear market comes, it sort of comes for everybody. And holding up today doesn't mean you hold up tomorrow. And Shockwave is a great example of that.
And to its credit, I mean, it's holding the bulk of those gains that it got recently. But if you look at kind of the weekly chart, there was that big weekly gain, and we're kind of drifting down to the halfway point of that trading range. So I guess the question is, can it hold here? And you mentioned this is worthy of the watch list. So what makes it kind of more worthy of a buy besides, of course, an improved market?
Well, yeah, the fundamentals are really impressive here that we're looking at. I mean, it's going from a loss to huge things there, the triple-digit sales growth. So this could be one of the big leaders. You don't want to just be looking for companies that are growing really small gains. I mean, you can get decent gains, but if you're looking for a big winner, you want to look for those big fundamentals. I know we often talk about technicals a lot because we're already assuming the fundamentals, and this is one that has really tremendous growth potential. So definitely that's, I think, beyond anything else, why you should be watching this.
Yeah, and to its credit, whereas a lot of the stocks out there, the estimates are starting to look a little bit softer, this actually does have some pretty decent estimates going forward for 2023.
Yeah, and so this is what you'd be looking for. Again, this is really a time you want to be looking for these stocks. What are the stocks that are holding up reasonably well? This is still holding up reasonably well, but in the context of everything, but something for the future. What are the stocks looking there? Charts are going to look ugly. And we looked at stocks that are all below their 50-day lines and their RS lines are at high or near highs. That's what you got to be looking for, and have that patience. And some of these will hold up when we really do turn. We're just right now we're not there yet, and we may not be there for a long time.
Yeah, very good point. Well, thank you very much for that commentary, Ed. Always a pleasure to hear your analysis. And for those that would like some more analysis, don't forget that we are on live every morning, starting 10 minutes before the market opens, so 6:20 Pacific time, 9:20 Eastern time. You can find us at investors.com/IBD live for a trial if you haven't checked that out yet. But we certainly go a full hour and a half into the open and do this analysis every day on a number of stocks. We try and get to as many as we can. And of course, we have special guests like David Ryan, who was on today. He's a weekly guest on Tuesday. So make sure you tune in to that if you haven't checked it out already. And thank you so much for joining us today. Tomorrow, Allie should be back in the chair along with Ken Shreve. So we hope you join us. Take care, and we'll see you tomorrow.